Good morning, everybody. Welcome to the Lock in Your Success Options Trading for Income Weekly Update for January 19th, 2015. Before we get going, we would like to remind you that we're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the presentation is for educational purposes only. And please be aware that there are significant risks in trading options, so please be aware of all your risks prior to placing any trades. And the trades and or results in the presentation are hypothetical computer simulated trades that are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come over to our website, check out our programs, the M3, Bearish Butterfly, ROCK, M21 group coaching and trading triangle programs. Also, join our mailing list and get your free reports, the 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And of course, as always, stay tuned for our programs that are under development. We do have the APM or Advanced Position Management course coming out this spring. So we should be taping that in March. So we're looking forward to that. All right, so let me drag over the market here, and we can kind of talk about what the market's been doing. We, as expected, last week, we're just in this really wide, choppy range, chopping back and forth here. And at this point, I'd expect more of the same. I don't think it's too much of a surprise that we come down to this support level at 1150, and we had a significant bounce off of that. It's been a pretty powerful level every time we've hit it, except for the one time that we exceeded it, and then we had a really, really powerful reversal. So, one of the things we're getting here is we're getting penetrations on both sides of our support and resistance ranges, which is essentially known as a broadening pattern, which tends to be a topping pattern. If we got, I'm just going to draw a couple lines in here. If you kind of go from here, right, that comes in pretty well. And of course, if we came from this range here, right. So instead of paying attention to your traditional horizontal support and resistance levels, we're just kind of getting this wider and wider range of volatility, which tends to not be good overall long term for the markets. And we'll see which way this goes, but like I said, that's generally a topping pattern, and they tend to be a little bit difficult to trade, especially if you start paying attention to technical levels. So, as for right now, we get a bounce probably to 1195. We'll probably turn back down to 1150 again. This is the most likely move for the week. If we fail at this level and just come back down again, then that's kind of bearish, obviously. But I would expect a move up to at least this 1205 area with this next bounce. And that's kind of what I'm thinking with the markets. I mean, if we look at the SPX, we're making a little bit more sense here. Again, we're in this wide range from 1975. This breakout here, this is kind of a end of the year thing. I tend to ignore that. But again, nice sideways range in the Dow, which has also been pretty volatile. We also have a similar thing happening. We have this range that's realistically, we're not in broadening patterns in these indices, so that's probably a good thing for the general markets. If we're thinking, hey, is a market crash coming? If all these go into a broadening pattern, then that would be a bigger sign. But these are relatively in a sideways market, so not too concerned about those. And the NASDAQ, we can just take a quick look at that as well. This is actually just a nice sideways range in the NASDAQ. This is actually, I guess you can call it a descending triangle, which is a continuation pattern. So we still have mixed. If I was looking at the Russell by itself, you're looking at a significant breakdown. If you're looking at the other indices, you're just kind of pushing into a sideways range. The NASDAQ's actually putting in a bullish posture here. So very interesting. All right, so let's see. I have just a couple questions. Oh, you're welcome for that. And okay, when exiting at M3, do I ever leg out of a fly for delta control? Close one leg at a time as verticals. Would it help in the case of a whipsaw? Yeah, okay, we can take a look at that in a minute. Oh, I guess I can answer that now. Yeah, I mean, whenever I'm exiting, entering, or adjusting a trade, I'm usually doing some sort of what you might call legging in. In other words, I'm always trying to do, figure out a way to adjust, enter, and exit my trades as flat delta as possible. So if you're at that skill set of a level of the skill set where you can exit the trade flat, then yeah, certainly recommend doing that. That helps with the whipsaws for sure. Let's see. Are these webinars still being played on SMB? No, at this point they are not. We're having challenges with certain things with the webinar, doing them on SMB, so regulations and stuff. So we kind of took them off temporarily for now. And they may be returning, so we'll see. And how do I move the profit chart to the left? This little button right here. If I shut that down, I think that's what you're asking me. If you want to make it full screen, you just kind of block that off there. Okay, so those are the questions there. So that's what I mean, in the market right now, we're still unpredictable, sideways, choppy. Russell looks bearish. Everything else looks relatively stable so far. So those are my thoughts with that. As far as the positions go, I'm going to drag up option view. We were still in pretty much everything in January right till the very end. The random fast market movement is not particularly good for us, close to expiration. And we just had to deal with that. Okay, so the question is no. Oh, I see. It says regarding profit charts, it just says no. I mean because mine is close to the column that shows the asset price. Right. So you want to know how to extend this range in here. Just hit this button here, right, which is this one here, and you can just take the graph and you can drag it to basically whatever size you want, and that'll do that. So that's how you do that. That you can give yourself more upside room or downside room, however you want to fix the charts. So nice and easy there. All right, getting rid of this. So this trade is the Bearish Butterfly into expiration guidelines. One of the things that we'll notice here, versus like an M3 trade into expiration guidelines, is that this is going to require a ton of adjustments, and you're not particularly necessarily going to do well. In other words, the amount of market chop back and forth with a Bearish Butterfly and expiration guidelines, this is designed to deal with a market that's more grinding, which is why I do have the what I call, which isn't officially in the program, but I do have this 3 strikes and you're out rule, which is basically says if I have to adjust up and I got to adjust down and I have to adjust up again, the trade is over. It's basically that's the market giving me feedback that the trade is too tight. In other words, I have too high a gamma level. So, realistically, as an advanced trader, I'm just going to widen this thing out a little bit and or do some sort of a gamma flattening technique and trade it out. But as a beginner trader, 3 strikes and you're out rule is a fairly good thing to go by, because basically the market's telling you that, hey, you're too tight for this market and you can get out. But I'll show you how I went through this. Essentially, there's going to be a lot of adjustments here, but if I come in on, actually let me go Monday morning, I'll show you the position we're in. So coming into the week, we look something like this, right? On Monday morning, we're up a little bit, we're relatively flat delta. We are in a position on the analyzed graph that looks like so. We have on 1180 butterflies, 10 1200s, and only 2 1220s. We obviously had a decent sized down move relatively early in the day, which put us over our maximum delta limit here. If we push to 1030, what I did is I sold out of the 1220s that we had, put in a full set of 1160s, right? And that brought our delta down to relatively flat. The good part about this trade is it generally gains value fairly quickly, and especially close to expiration. If the market stalls at all, you have a good chance of really making your money back and making a profit. But the market doesn't settle down, which it did not this month. It's just there's no way you're going to do this getting chopped back and forth. So at this point, I had made down adjustments and up adjustments, and here's another down adjustment. I'd probably be interested in exiting the trade at this point because, like I said, I know the market's a little too volatile, but we're just going to move it forward anyway. Let's see. That was all we had to do that day. And if I go to Tuesday at 10 a.m., I'll show you where we sat coming into Tuesday. Right, big reversal Tuesday. Right, so now the market's up 19 points at 10 o'clock in the morning. When we simulate these and when I live trade these, I do urge people not to adjust till 10:30, but sometimes, and definitely not to adjust till 10 o'clock. One of the things here that I want to point out is, it's 10 o'clock in the morning. We're up 19 points. The trade's down near its maximum loss number. Now, I'm way over my maximum delta, but the trade being down this close to its maximum loss number, I'm usually not going to do anything with it. Because the reality is, if I were to do something with this, I'd have to sell these 1160s. I'd have to buy a full set of 1220s. Not only would that put me in a position where I'm flat, that would put me in a position essentially, not only might that draw me down, right, because of execution risk, I only have $1,000 here and I'm moving these contracts. Not only would that put me down under my maximum loss, probably just from the adjustment itself, but now any price movement in either direction is going to put me significantly under my loss numbers. So realistically, there's nothing I can do here. This, the market gap essentially put me in a wait and see mode, so I can't do anything with it. So that's what I did. I did nothing with it. There's no point in adjusting it. If, like I said, if the market continued up here, we would have had to close this out at our maximum loss levels. But by the time about 11:30, 12 o'clock came around, the market did back down enough. Now, because the market backed down, I'm only down 6,000. Now I have enough capital where I can make a sensible adjustment here and do something with the trade. So, so I did. So we come in here and pulled off 5 of these lower butterflies, which of course we would have been better off not doing because the market continued down. But like I said, we didn't know that at the time. Could have been an intraday retrace, and I needed to get my delta down. So pulled off half of these trades here at 1160. And if, let's see, then nothing till the end of the day. So if we go to the end of the day here, we'll just show 1500 first. Right, ended up being 2 positive delta. So to deal with that, right, at the end of the day, we took off, let's see, we bought 5 1160s and we sold one of the 1200s. So we came in here, started buying, I'm sorry, we didn't buy 5, we bought 10. We bought all the 1160s back. Yeah, so we bought the 5 that we sold off earlier in the day back, and we sold off one of these 1200s. So that was 3 adjustments in one day, right? Usually if it's 3 adjustments in a trade, I'm willing to actually pull a trade off. This is 3 adjustments in one day. I definitely should more or less be out of this trade at this point because it's just being too crazy. So from here, Moving forward, let's see, Wednesday at 13:30, we had some more stuff we had to do, so let's just go to Wednesday at 1300. And this here is plus 461 at 1300, right? So the market continued down. By 1330, we're over our maximum delta limits. So we sold off more of the 1200s, bring us down to about 322. Thursday, and let's see, 1530. With the market continuing down, we sold off some more of these 1200s. Put ourselves into a position like this. Again, another good opportunity to exit here. And like I said, I'm just going to bring this pretty much all the way in. We go to Thursday at, I'm just going to go show you 9:30 for a second, and then we'll pop up to 10 o'clock. Right, this is what we look like at 9:30. We pop till 10 o'clock. The market was down again. So at this point, right, it's expiration day. The market is moving still too fast for us. Realistically, like I said, it should have definitely been out before this anyway. So basically my strategy here is to scale down. I sold off all my 1200 butterflies, sold off 3 of my 1180s, go into a position that essentially looks like this. And like I said, this is another phenomenon that happened this week too, which I'll talk about, where they jacked up the volatility numbers, or I guess not volatility, but they threw in the time value in these short options, which artificially depressed your price. Realistically, this shouldn't have been a problem, but the market makers are screwing with prices to force us out. So this is where we end up here, and then of course later in the day we just simply sell off these 1180s. I think it was at 1400 or something. Right, sell off the 1180s, end up in this position, and then eventually just sell that off and close the trade for a loss of, let's see what that come out to. Well, it's $6,700, so, or around $6,700. So that's pretty much, like I said, a rundown of how we would have managed that into expiration. Market's just moving a little bit too far back and forth. So when the market starts moving back and forth, you exit the trade or you flatten gamma. So you flatten gamma, you could have gone out into, you could have run into a rock trade. In other words, you pull the center butterflies and you're in a 2/3 rock trade. Then you widen out to a cap position, and then you widen back to an M3R if the market continues down. Right, that's how you would maybe combine the systems. Probably wouldn't be able to pull something out doing that. But like I said, this is just too volatile for the expiration guideline rules. So the question is, do I sometimes adjust the position with a directional expectation, which means the delta to profit from the expected movement is the underlying? Yeah, so in this presentation, I don't. Right, this presentation strictly follows the guidelines within the programs and takes no market movement, no market bias in consideration. So for better or worse, that's all we're following with pretty much all these trades. And that being the case, then no, I don't. I mean, in real life, am I going to take market bias into account? Sometimes I do, especially with entry and whether I'm going to enter a bearish butterfly trade at all. A lot of times live, I'm not necessarily going to enter one of these. And I think I told you earlier that this live trade, the live trade I had, I did have a live January bearish butterfly on. However, back when the market dropped, I don't know, I think it was back in here. The market dropped down into here and then bounced. Right, as soon as it comes back over this level here, you've got to figure the market's going to go to at least here. And of course, usually if it breaks out on one side, a lot of times it'll break out on the other side, which it did this time. So knowing that, what I commonly do with the bearish butterfly is I flip it into an M3. So we come in here, You break this support level, you have a snap and crack reversal, which again indicates a large up move is coming. We flip this into an M3 trade, traded out as an M3 the rest of the way, and sometimes even convert it into a rock trade near the top, but didn't do that this time. Anyway, that made for a very, very good trade for the month. I had a couple of spectacular trades this month in January, really great returns, and that was actually one of them. I think I was up 10% when I started pushing this into an M3, held profits, and then was able to make a little bit more. So that's actually a good way to handle that particular situation, and it's something I've been doing for a long time. So anyway, like I said, the bearish butterfly entry for January was a good entry. But just because it's a good entry doesn't mean it's good for the whole duration of the trade. That pullback changed the dynamics of the entry, and switching over to an M3 is very, very good. Yeah, and Andrew's just saying, close to expiration, can you use the gamma compared to the ATR to decide if you should stay in a trade? Yeah, I said this earlier, right? We are still, let's see, if we're in the Russell, we have an average true range over the last 14 days of in the 17-point range. If I'm sitting here in a very bearish, very high gamma position, as in, if we go back to here, right, I can essentially tell, well, let me go back to early enough in the day. I can essentially look at my analyzed graph and say, hey, if I get a 17-point move from here, that is, well, almost 20 points, right? So that's almost 92, right? I can tell I'm tapping off my max loss numbers with a normal normal range, right? So that is that's a very bad situation to be in, right? Because I went into normal stuff, and I know that's going to be a problem for me. How do I use time premium? Do you use time premium when exiting the M3 trade? Oh, I use the time premium here because whenever I buy or sell an option, I want to get an idea of what I'm buying or selling for time premium. I don't necessarily use it per se when entering a trade, but I do want to be aware of what I'm doing. I don't want to, in other words, if I'm in this position here, I don't want to do a bullish vertical, or I don't want to put on if I was in this position here and I needed an upside adjustment, I wouldn't want to be putting on 1,200 butterflies. I'm not selling any time premium with my shorts. There's no reason to actually do that, right? Now, within the program, and the demonstration purposes, I might do that because that's what the program says to do. But when you start live trading, or you get some coaching, or once you get to be a better trader, you realize that, hey, there's no point in me selling the time premium at 1,200. There's no benefit in that. So things like that is what we look at. So I might buy the calls. In other words, my procedure says to put on a 1,200 butterfly because essentially for delta control. It's not going to help with my theta number at all. I mean, it might help. The thing about your composite theta numbers are not always terribly accurate. It actually might help with my theta number if I sell these, but the reality is it doesn't because it only has 30 cents a time premium. So I'm just going to buy my 1150s, and then if the market goes up further, I'll sell the rest of I'll sell the 1200s and fill in the rest of the butterfly. But yeah, things like that is good to know. Time premium for sure. Okay, so let me go to let's see what we have next here. Just look at the January rock trade. Now, with the January rock trade and the January bearish butterfly, we're both in very similar trades to start with. The rock trade got converted over to a rock trade, which is essentially a high gamma position, kind of like the bearish butterfly. And like I said, the market's essentially telling us we don't want to be in that position. The good thing about the rock trade is that trade is designed to, as soon as the volatility picks back up with that down move, to switch back into an M3, and that's essentially what it did, right? So if we went to Monday, All right, just a quick question. You said at the top of the range it would have been a good time to switch into a rock trade. Theoretically, there would be, yes. If there were more days to expiration left and the entry guidelines didn't allow a normal rock, would I still convert to a rock trade? No. The rock guidelines the rock delta guidelines do not work if you don't hit, if the entry test doesn't work. So yeah, I need to make sure that that's correct. So let's just switch over to the rock trade and we'll show what we were in. We were essentially in a position like this on Monday. I don't think there were any adjustments on Monday. So yeah, nothing on Monday. So with this trade, this is what we were looking like. If I just take a look at this, right? Really nice, realistically an M3 position at this point. If we go forward to the morning, on this trade here, we had a big move up, obviously, that failed. Most of the time, we don't pay attention to intraday ranges with the rock trade or the M3 trade. This really shouldn't have been an exception per se, although I understand some people might have done that. So what I did here, and it is allowed, by the way, right? So we are allowed to do that. So what I did do here is I did react to this. So I came in here, I cut my delta down to 31 and my Vega to 56. I did that by selling some 1200, 1190 verticals, right? We did 10 of those, and we bought 10 1140, 1150s. So we rolled the 10 1140s to 1150. I'm sorry, we sold that too. So let me make sure that's right. Let me go to T-log. So on the, let's see, the date here is the 13th. So on the 13th, 10:30, we sold the call, right? I sold 10 of those, and I bought 1150s. Oh, okay, no, that's earlier in the day. So, no, that's all I did. I left these alone. Right, so all I did is I shut down the upside of the trade, right? Call this a lockdown. In other words, I've put the floor in how much money I can make or lose with a continued up move. And I didn't do this with the regular M3 trade. I did this with a rock trade because I wanted to show a little bit of difference. So I put the floor in with that. Later on, when the market reversed, I started taking on too much positive delta, not quite at 1330, but time 1400 come along. This was down enough where I was taking on too much positive delta. So I actually did 10 1150, 1140 verticals and put ourselves into a position that looks like this coming into the close, which was fine. And then that was it. That's all we had to do. Thursday, end of day. We were within delta limits the rest of the time. And by end of day Thursday, I had the choice of whether I want to close this or try to expire it. Would have actually been fine expiring it. Wouldn't have been an issue here. I think the settlement was over 1150, so that wouldn't have been a problem here. I just decided to let this close out and ended up with a $4,700 profit, which is close to, which is very close to 10%, which is what we would be looking for if we were looking in an M3 type of configuration. So the M3 trade, which was essentially in the same position on Monday, what did the trade look like at 10 o'clock? All right, let's go look at 10 o'clock. At 10 o'clock, we were up $3,800. We had a delta of minus 891. So that's what it looked like at 10. Okay, great. And let's see, the M3 trade we did, so that was using intraday adjustments. The M3 trade, I did not do intraday adjustments at all. We just did 530 adjustments. And again, this is just mainly for contrast. So Tuesday at 5, I'll show you what we look like. Actually, I'll show you what I look like Tuesday morning on the up move. Let me switch accounts. Right, way over our maximum delta. Our Vega's still okay, but like I said, a lot of times the M3 trade, we're not necessarily going to adjust intraday. So the ROCK trade, being in a similar position, I did do the intraday adjustment. This one I did not. We just waited till the end of the day here. At the end of the day, we actually ended up having to do a down adjustment. We did, again, the same thing here. We did the 1150 the 1140 verticals down. We did not sell the call, though, right? So I did the different type of adjustment. The other one we locked down. This one I didn't lock down. All I did is I corrected my delta, which was too far positive, and went into this position here, which is still a very nice clean position. And then on, let's see, Wednesday, with the big up move, I sold 5, 1200, 1190 verticals to put us into this position by the end of the day on Wednesday, right, which is a little bit different than the other one. And then on Thursday, we'll just go to 1500, had to close the position out. So, right, this has actually ended up being in the $4,700 range because I let this run till the end of the day and the market came down further, right? So if we look at the reports here, about 47.76, so it's about the same results as doing it the other way in this particular case. But looks looks perfectly fine. As far as the other trades, well, let's just quickly look at how that was for results here. And just so that you know, I'm running the same plan we did last year. We're going to run the Bearish Butterfly, the M3, the ROCK. We'll run the V trade again. Same amounts of capital, no changes. We lost 13% on a Bearish Butterfly, 9.6% on an M3. We gained 9.4 on a ROCK, and the V trade, which I didn't show, which had no adjustments, was a positive 6.1. The M3 T-log, yes, M3 T-log. And this month was interesting as far as results go. In general, the beginners did better than a lot of the more advanced traders, and I think it's because the beginners were following guidelines. And if you followed the guidelines on this trade, you did fairly well. Myself, as one of the more advanced traders, did not follow the guidelines, and I did get chopped up, and I did take a small loss I took a half a loss in one position, and I took a very small loss, like a 3% loss in another position. And part of that was letting your market opinion kind of get in the way of the trade. Like I said, I had a couple of spectacular trades this month. I mean, with really good returns that overcame pretty much anything I would have lost, but I did have two trades that were losing. So one of them was a fairly large trade, but like I said, we'll talk about that next week. So so following the guidelines was really helpful. Staying away from intraday adjustments was really helpful. And I think I've been saying this for a couple of weeks now. You have to be very slow to make your adjustments in very choppy markets. You're going to exceed your delta ranges, but that typically benefits you. It doesn't benefit you in a trending market, but certainly in a choppy market, it's very beneficial to do that. All right, so the V Condor essentially expired like this. Right, no adjustments there. Let me go back to the ROCK trade. I'm just getting a request for a T-log for the ROCK trade. Then we'll quickly look at the February positions, which is really easy because we it's really easy because we didn't have any adjustments, right? The thing is, when you're coming into expiration, you tend to get more and more active within the position. Where if we're doing the February trades, realistically, there's not a lot to do. So I'll just quickly go over those as soon as we finish showing this thing up here. All right, let's kind of flip over to February. I can just go to the end of the week. So on our February V Condor, this is essentially the position that we were in. No changes of about $1,200. Again, no adjustments at all here. This is what we look like. February Bearish Butterfly. Again, no adjustments as of this point, or about 3,700. This is another situation here too, right, where we get a harsh market reversal and we get too close to expiration. It might be not a bad idea to push this into more of an M3 trade as the market comes up. And I'm going to show that at some point, probably at maybe group mentoring. We'll go over that trade. And M3, again, no adjustments here. All we do is enter this trade, and that looks like that. So actually, we may have done a rollback on this one. Yeah, we did a rollback earlier in the month. But that looks like that. There were no adjustments last week. And we have, that's all we have. We're looking to get into a ROCK trade on about Wednesday. My guess is that we're going to be entering an M3 trade. I'm assuming it's probably going to be too volatile for that. Okay, I said I followed guidelines, I think, for the most part, but converted that end game condor probably too early at the 15 days expiration. Yeah, that's very early to do to go unhedged. I kept most of the adjustments at the end of the day, ended up with $3,800. Hopefully that was a profit, Daryl. Great job if you did that. That's great. Okay, that's a good return on that. Again, like I said, a lot of the new guys did actually pretty well because they stuck to the guidelines. A lot of the really good advanced guys did really well too, but the people who were trying to call market direction or were nervous and adjusting intraday, or were doing a very conservative type of M3 and adjusting, doing intraday adjustments, kind of got beat up this month. Do I have a course that teaches the guidelines of econ? Or not at this point, no. No, so I don't have anything that teaches that at this point. If you want to do a one-on-one session with me, I can go over the rules are relatively simple. I can kind of go over them in an hour. So that's the only way I'm teaching it at this point. It's just a very simple trade. Yeah. Okay. Yeah. So good job, Daryl. Good job. Glad to see that's turning around for you. Because this is again a tough month in January. The market's just really volatile right now, and coming into expiration is very challenging, especially if you let your gamma get out of control. So that's all I have. So I hope everybody enjoys their day off in the holiday. Thank you for joining me, and we will talk next week. Oh, also too, just a quick note that we're not doing the 10 o'clock update this morning on the SMB trade. They're not working today. So have a great week, everybody. Thank you.